How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 19 to the Asian Session Library. Once again, last night we had a successful model with the pair US dollar versus Japanese yen. As you have noticed, or if you didn't notice, we've been using the same pair this entire series. Before we get into the video, I do want to say thank you all for the support. Thank you for all the questions. Thank you for allowing me to teach you something different that other people haven't been talking about within the trading community, whether that's on Twitter, whether that's on YouTube, whether that's on TradingView, whether that's on Telegram, wherever they talk about trading information. Thank you for allowing me to show you my perspective on the market. So, as further ado, let's jump right into the market. So, the Asian session model is very simplistic. What we're utilizing is the buy stops and sell stops within the New York lunch, which is a dead period, to trade the Asian session, a live period. What we're utilizing is the 15-minute time frame and the swing highs and swing lows that have been unbroken. So we have a swing low here. Just to keep it very simple, the model has been the same throughout all the episodes. Swing low here. That's sell side liquidity on the 15-minute time frame. We have this one swing high that's unbroken. That's a buy side liquidity on the 15-minute time frame. So what we're anticipating is a purge, whether that's on buy side or sell side, and then a revert to the opposite end of liquidity that's available to the marketplace. At times, it doesn't get to that other side, but it does present enough to be in profit or grant substantial amount of pips to the idea. Now, generally, I like to mark off the opening price to the Asian session because it's a great ideology to give way to visualize whether or not you should be a buyer or a seller. So this is fair value, the Asian open. Now anything above this price point is premium. Anything below it is a discount. So I know I sound like a broken record. I mean, this is episode 19, so I do sound like a broken record, but I just want to bring numerous examples to the trading community so that nobody is confused about the steps. At this point, I hope I am being simplistic enough for all traders of all levels to understand how exactly I go about finding this model and finding success. Whenever price is above the Asian session open, it's in a premium. It's ideal to find sell scenarios. That doesn't mean outright go and sell once price gets above it. No, you need to have context behind it. You need to have sponsorship behind it. Same thing vice versa. When price drops down below the Asian session open, it's in a discount. That means it's most likely ideal for you to be a buyer instead of a seller. That doesn't mean as soon as price gets below this price point, go look for longs. You have to have context and sponsorship behind it, and you'll see exactly what I mean. I'm not trying to anticipate whether or not price is going to go up or down at the beginning hours of the Asian session model. I'm not jumping in right away. You know who jumps in right away? Retail traders. There is a huge wave of traders coming in at the open of the session. They're being lured and enticed to one side of the market. They think that there is buying pressure or selling pressure coming in. When in fact, the way I visualize it in my methodology is that they're just being tricked to the wrong side. Now, at times, retail traders are right. And now I'll explain what I mean. So when the market opens, and this is just one scenario, retail traders are normally going to come in and flood which way they think the market is most likely going to go. And they visually will see it. So if they see a lot of up candles, they probably going to buy. If they see a lot of down candles, they're probably going to sell. So if they see price coming down like this, they're going to jump in, fear of missing out. They're going to try and sell. And then probably going to look for some type of retail logic, break retest, and look for price to go lower. At times, they are correct. I don't want to say retail traders are always 100% wrong. At times, they do get it right. Retail traders do find success and do find profitability at some points of time. However, I want to be counterparty to that idea. That's the whole point of this model. I'm being counterparty to the sellers. I want to buy what they're selling to me. I want to buy it at a cheaper price. If they want to sell at a discount, go ahead. I want to buy it from them at a cheaper price. Thanks for selling this asset class to me at a cheaper price because now I can afford it and I can buy it at a cheaper rate and hold it and hope for it to gain value over time in the next couple of hours during the session. Vice versa. Retail traders come in, they see it going up, they chase, fear of missing out, and they think break retest, which doesn't mean they're always going to be wrong. They could be right and they can make money off of that. But I want to be counterparty to that idea. I want to be the person that's going to sell to them that's buying. So when they're buying, I'm selling it, meaning I know that within the next couple of hours, this asset class is going to decline in value. And that's the whole idea. I'm trying to be counterparty to whoever is trying to find the breakout. Purge buy side, I'm trying to then see price revert back down to sell side. Purge sell side liquidity, I want to see price revert back down up to buy side. That's all this model is. It's a very simple approach. I'm trying to catch the turtle soup, reversal, whatever you want to call it. So let's play it out and see what happens in this Asian session. Now, this is the first Asian session of the year, and it was very successful. There we go. So that's our break here on sell side liquidity. Now, what could retail traders be anticipating? Probably a break retest and probably going lower. However, I'm not looking for that. What Deontay is looking for is counterparty. I want to be the buyer. Yes, sell it to me while I buy it. But on the lower time frame, I'm looking for my entry. Now, I tell people all the time, my personal take on it is that I'm going to use the 1 minute. That doesn't mean there aren't times where the 2 minute, the 3 minute, or the 5 minute doesn't show entry ideas as well that I'm going to show you here. So on the 1 minute time frame, I'm going to go down to the 1 minute. I'm going to go back to that break right when it occurs. Like I said, we're in a discount and that's a premium. We're below the opening price. So we should be looking for buying opportunities. Now, this is the context and the sponsorship behind it. The buying should come in now, being at a discount, breaking that 15-minute fractal swing low. What I'm looking for is a simple fingerprint or entry technique, and that's going to be a fair value gap that breaks a swing high. Before, I used to be taking the very first fair value gap that forms after breaking the swing point, and it did give feasible results. But I've noticed in time that sometimes I would be in more drawdown, and then the actual real move would occur. And that real move normally came with the fingerprint that I'm going to show you right now. There it is. So you got price breaking a swing high formation with a fair value gap to the upside. What I'm going to do at this point is wait for price to come down into it and find a long. Now, I'm not trying to be fancy. I'm not trying to figure out how far into the inefficiency it's going to fill, because at times it just taps it and goes higher. At times it only fills half of it and then goes higher. At times it fills the whole thing and even then some and then goes higher. So I'm just going to take the first contact for the entry, which is going to be the premium side of the fair value gap. I'm going to be looking for a one-to-one scenario. That's just a very general, basic trade idea. I'm going to go for a 15 pip SO and a 15 pip TP. So $1 for $1. That's what I'm looking for. It's a very simple approach, a one-to-one scenario. Now, sometimes one-to-one scenarios tend to turn into more than one-to-ones. They turn into 2-to-ones, 3-to-ones, 4-to-ones, 6-to-ones, 8-to-1, 9-to-ones, and etc. Now, let's see what happens as price plays out. So play it forward. We're long now. And notice how price completely rebalances this whole area here, right? The inefficiency is no longer inefficient. It's been covered. It's been balanced now. And at that point of contact, we would be long. And let's see what happens as price continues to trend higher. We're getting higher swing highs, higher swing lows, and there are going to be moments in time where there's going to be sell stop raids, meaning that even though the market is running higher, there will be moments in time where price runs swing lows and then continues running higher, knocking out those that are potentially long and have a trailing stop below a low, which is why a lot of traders get kind of flustered because they got it right, but their stop loss is too tight. They moved their stop loss too early. That's something that comes with experience, and you'll notice as you progress in your trading career that leave your stop where it is. Don't move it too early, unless you're at means of blowing a challenge account or something, or you're at means of trying to protect your profits, your last couple of dollars. Then I would understand. But if you are risking properly, those are things you shouldn't have to worry about. If you're risking 1%, 2%, and you're good to go, you let it fly and you trust the model. And as we can see, going into Ipto True Day, the new day, this is midnight opening price. We can see the price is still going up. We got about 10 pips on the trade in profit, little to no drawdown. So very dynamic movement. I was showing this to the chat last night that this is something I was watching, and this happened a little later in the session as well, around 11 p.m. So it was very late. Most of the other examples I showed you in this series happened a little earlier, before 9:30 or just around 9:30. So I had an alert here. It woke me up. I sat here, watched it, and then it occurred. And then by the morning time, we can see that it continued flying up. We can also see, as we play it out, let me just click play. As we played out, going into that IPTA New Day, going into London session, where all the volume is going to come into the market, 2 a.m., right? You can see price completely starts to fly higher. And where does it run? Right back to those clean highs up here. All these clean highs here, 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 and even that 15-minute swing high that we found during the New York lunch session. So this is something I've noticed over time with the model, and it is Tuesdays tend to be one most successful. Not to say it doesn't fail. There are times where this pattern forms and it does stop me out, and I got to live with that. No model is 100%. However, Tuesdays tend to be the most successful. Likewise as Thursday, and the same thing can be said. They're successful and they tend to be greater rewarding as well. They tend to be able to be held into the next trading day, which is Wednesday. It's so funny because you're going from a Tuesday to Wednesday. And I think that's why it's most likely preferred to hold, because it's midweek and the ideal trading days is Tuesday, Wednesday, and Thursday. And Thursday going into Friday, I've seen as well with examples, and you'll see it here in the series as we progress in 2024. Thursdays tend to be successful and also trend into Friday, going even higher. So you can see price just completely just runs higher for the rest of Wednesday. And that's over 100 plus pips off this model idea. So we went from a 1-to-1 to etc., as we can see. And hopefully you found this insightful. This model is meant to be very simplistic, and it's something that I don't see a lot of people putting out in the trading community. And I just want to be one of those traders that puts out for other traders that want simplicity, or puts out for traders that aren't available for London session or the New York session. This is for people that probably don't have enough time, or these are people that just want to squeeze a lot more out of the market. You know, they trade London, they trade New York, and they thought that they couldn't trade Asian session. Well, you can. I've been showing it throughout this series. I've been showing the exact same model over and over again. Like I said before, I appreciate you guys for supporting me. I appreciate you guys allowing me to show you the market from my lens. Peace.